So anytime there is decrease in the value, are we together?
Yeah.
So any increase in, now another reason why we credit our account is that when there is increment in the value of our liability or income. Are we together? Are we together?
Yeah.
So that's the reason we can credit our transaction. E.g., when goods are sold, the revenue of the company what? When goods are being sold, the revenue of the company will what? What will happen?
The revenue will increase.
The revenue will increase when you sell out your goods, the revenue will surely what? Increase. Therefore, sales account is being what? Is being credited. So with this, because of increment in the revenue based on sales, so the revenue account will now be what? Credited. Any question?
No question.
No question. So now let's quickly look at cash transaction. The last time um we had a class, though we only looked at the four types of journal. We just looked at the four types of journal we have, though it's beyond that four. We also have petty cash book, we have the cash book, then the general what? The journal proper, or we call it general journal. Are we together? Are we together?
Yeah.
Good. Now let's look at cash transaction. Now the simplest way to look at the application of the double entries through cash transaction. When cash is received, you what? What will you do when cash is being received?
You debit it.
We debit cash account, then credit corresponding what? Account. Are we together?
Yes.
So that's when there is involvement of what? Cash. When cash is received, you debit your cash and you credit the corresponding account. Likewise, when cash is being paid, then it means now when cash is paid, credit cash account and debit the corresponding entry. When there is payment of cash, you what? When cash is received, when cash is paid, you credit your cash account and you debit the corresponding entry. So We have a question here. Let's quickly look at the question together. Oh yeah, let's read. Oh. The following transactions took place. Oh yeah.
January 4th, 2016. Cash sales of 900,000.
So cash sales of what? 900. How do we post? Which account is giving and which account is receiving?
I think we have cash
What?
accounts, we have sales accounts, right?
Yeah.
Okay.
So cash sales of 900,000 naira. So we debit our cash. We are receiving what? 900,000 naira. We debit what? Which account? Which account is the receiver?
Sales account.
Receiver. What are we receiving when we make when we make sales?
We are receiving the 900,000 cash.
We are receiving 900,000 naira in cash. So it means our cash account is receiving. We debit cash account. Then the corresponding entry goes to sales account. It goes to where?
The sales account.
I will join the class back.
Okay.
Please I'm coming. I'm sorry for the break in transmission. I need to quickly attend to something. That's why. So, can we continue?
You can continue.
Okay. So, where are we? Okay. Let me connect with my laptop so that I'll be able to. We can use this thing, the Excel sheet, to explain some things so that it will be more clearer. Do you understand? Okay. Let me quickly. Hello, can you hear me?
I can hear you.
Can you hear me? Hello?
I can hear you.
Okay. So now let me use my phone to share my screen. Hello, can you see my screen? Hello.
I can see your screen.
Okay, good. So now let's take the first this thing. The first transaction we have here. The first transaction says we have a cash sales of how much? 900,000 naira. So we come here. Okay, let me share my screen also here. So you'll be able to see. So can you see my screen? So
Yes, I
what
can.
do we do here? We say cash account. So when we get to the main ledger, you will see how we say debit. We use DR because we are receiving money, yes or no? Then the other account is what? Is our sales account, we credit. So actually, this is how our ledger should be. So we have dates, we have particulars, we have folios, then we have amounts. So we repeat the same thing here. So let's make this our cash account. So this is our cash account. Are we together? So date, our date will be here. What's the date?
January 4th, 2026.
One one
2016.
2016. So when you want to write your narration, which is the particular, it is going to which account? Sales. Are we together? Then how much is our money? How much?
900,000 naira.
We have 900,000. So your 900,000 naira will be here. Are you getting it? So this is how our ledger is. So you do the same thing here. This one will be what? Our sales account. So with date, the same date. Then it's coming from where? It's coming from which account?
The
So
same one.
we are giving the money to cash accounts. Are we together? So 900,000 naira. Hope you understand. Hope you understand. So next one.
Payment of office rent 250,000 in cash.
Payment of office rent. So what are the two accounts involved? Which account is giving, which account is receiving? Oh yeah,
The
oh yeah.
the rent is receiving.
Rent is receiving. Then
The cash is giving.
which account is giving?
The cash account.
Cash account is giving. Which date? What's our date?
10th January 2016.
We have 10th January. So rent abi?
Yes.
How much?
250,000.
So you record your 250,000 naira here. Then corresponding debit entry is coming where? So we have rent, rent accounts. So it's coming from where? 250.
Cash account.
Do you understand? So next one,
Purchased 200,000 naira goods for cash.
we purchased 200,000 naira goods for cash. Oh yeah, can you try? Oh yeah, try.
Okay. Please,
What are the two subject matter involved? The two subject matter involved.
purchases
You have purchases
and cash.
and cash accounts. You get it right?
Yes, purchases and cash accounts.
Because it relates to goods and services. So and then once it relates to goods and services, goods happens to be what is the item needed for the company's what operation, yes or no?
Yes.
We need it for the daily activity of the entity. Hmm? So then we now say we come to we have one sales account, yes or no? So we don't need to open another sales account, abi? Or do we need to
Yes.
still be oh, we don't need to open another sales account. We are using just single sales account. So we are using this. So what's the date?
18th January.
18th one. So purchases is the one we are transferring this to Abi. How much?
200,000 naira.
So you come here. So we say purchases. Abi. Then which of the dates? What's the date?
18th January.
So we have 18th. So the money is coming from where? How much?
200,000.
I hope you are getting it.
Yes.
Good. Then the next thing, they said purchased stationery
Choice
for
station.
40,000 naira. So what are the two subject matter involved? The two subject matter involved
Cash and stationery.
and stationery account. You know the reason why we do not put purchases. Why? Why can't we add purchases as part of our this thing as an account instead of stationery account? Why do we use stationery? Oh yeah, I need your this thing. Why do we use stationery instead of purchases? Because if you look at the question very well, they tell us that purchased stationery for 40,000 naira cash.
It is an asset for the company, the business.
Stationery is not an asset. Stationery is being seen as an expense because the utilization of stationery does not take a longer period. Yes or no?
Yes.
So we only use it for a short period of time. So it's an expense. You write it off as an expense. Are we together? And the stationery is not being purchased for the company to resell. Abi, is that not it?
Yeah.
Stationaries are being purchased for the sake of what? Administrative use. Yes or no?
Yeah.
So that's the reason we can't classify stationery as we can't say purchase of stationery should be transferred to purchases account. So we are opening, we go to cash account, Abi. What's the date? So we say 25th, 1, 2020, 2016. Abi. Then we now say stationery. Abi. How much?
40,000.
40,000 naira. Hope is clear. So you now get to
Yes.
your good. You go to your open stationery account. Abi. You can tell us stationery. Abi. What's the date? 25th. So we have cash accounts. How much? 40K. Hope is clear. So so hope is clear.
Yes.
So let's look at credit transaction. I said we have two types of transaction before, like, and we have explained how this thing work. So we want to look at transactions being made on credit. Abi. Now, when cash is not paid, is not received immediately for goods sold, then it is sold on what? On
Credit.
credit. When we transfer goods to our customer and the customer could not pay immediately, then the such transaction is being sold on what? On credit. The goods is being sold on credit. Are we together? Therefore, the receivables or customers account receives instead of cash. You know, instead of, what we've been doing, what we've done before is we were recording based on cash. Is either the cash gives out or the cash what? Receive. Yes or no?
Yes.
But now, instead of the cash now receiving, it is now either we open a receivables account or we use the customer's name to open an account. Hope you are getting it.
Yes.
So, like, let's take for instance, these sales that occur, the sales we have here, the first sales that they said, okay, the one on the 4th of January, are we together? The one for the 4th of January here, Abi. So that of the 4th of January, now they now tell us that instead of the sales account, instead of the cash account, it's being sold to the customer on credit. We don't need to stress ourselves. You can just come here, then you open your receivables account. So we see receivable as an asset. Are we together? So it is now a receivable that is receiving the money. Abi, Abi, is the receivable that received the goods from us. So we say, what do we do?
Debit it.
We now say, we either say trade receivable, so we now put it here for one. So you now put your sales here. Are you getting it? How much? Now the same 900,000 naira. Hope you understand. That is when it is being purchased on what? On credit. Now the same thing applies to our payables. Are we together? The purchases we made. Let's now assume it is being we the purchases is being made on credit. You know, instead of we crediting our cash, it will now be trade payables. Are you getting it?
Yes.
It will just be trade payables. It will now be trade payables. So this I will soon finish. Trade payables. Then these dates, just bring it here. Okay. Do you understand? Hope you get it.
Yes.
So that's how to record based on credit transaction. So any question? Now let's quickly talk about how to balance our ledger. How to balance our what? Our ledger. Now at the end of the month, we need to close all these ledger accounts. As you can see, we need to close them. So how do we close them? So this side, which is the debit side we have here, and this is the credit side, abi. If you add this together, let's add everything together. The debit side, you can see that we have 490 here. Then we have how much here on the debit side of our this thing, of our cash accounts. The debit side shows 900. The credit side shows how much?
490.
Shows 490. So
490,000.
we need to make this total. This total, we need to make it the same value. Are we together? Which one is higher? Which one
Debit
is higher?
side.
The debit side is higher with 900,000 naira. So what do? We need to make the credit side have the same value with the credit. We need to make the credit side have the same value with debit side. So at the end of the month, we now say 31 1 2016. So the difference between the debit side and the credit side is we is what is being represented by balance carry down. Are we together? So you
Yes.
now, what's the difference? Oh yeah, minus it 900 minus 490. What do we have? So what do we have?
410.
We have 510. So at the end of the period, both debit side and the credit side, they are, it's not 500 and nine, it's not 510, 410. Abi?
410.
Okay, I think you said 510. So at the end of the period, we have, so we have this. So now, moving forward, we've closed the account for the period. So the next period will be after 31. What do we have? The following day, 31st of January. What do we have? The next day,
10th of February.
that will now be 1, 2, 2020, 2016. So we now use another name known as what? Balance brought down. So balance brought down. And this is what we this is how we put it. So we now have 410. So if we are to record this one in our trial balance, the cash account of 410 will be on the debit side. Do you understand? So let's do that of sales account. So how do we do the carry down for sales? You know, the credit side of our sales account is on which side is having a higher value, debit or
Credit
credit
side.
over sales. Yep.
Credit side.
So the credit side. So it means at the end of the period, we have a balance carried down to the year. Abi, is that not it? Then we put 900. Hope you understand. The same thing we have here. So I will give you assignment. So you complete this in your note and you snap it to me. Do you understand? You snap it to me. So coming to the next this thing, it should be Abi. Hope you understand. So I will give you this
Yes.
as assignment. So I think I have your email. I'll forward you this on your email. So you complete the remaining one.
Okay.
So we continue from here tomorrow. So let's continue tomorrow. So any question?
Alright. Same. No question
Hmm?
now. No question
Any
now.
question? So we continue it tomorrow. Have a wonder. Yep.
Thank you. Thank you.
You're welcome. Good night.